Ladies and gentlemen, good day and welcome to Dilip Buildcon Limited's Q3 and 9 months FY2024 conference call hosted by S&Shield Technologies. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jill Chandrani from S&Shield Technologies. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone. Welcome to Dilip Buildcon and Q3 9M FY24 earnings call. From the management, we have with us Mr. Devendra Jain, Managing Director and CEO, Mr. Rohan Suryavanshi, Head Strategy and Planning, and Mr. Sanjay Kumar Bansal, CFO. Before we proceed with the call, let me mention the standard disclaimer. The presentation that we have uploaded on the stock exchange, including the interaction in this call, contains or may contain certain forward-looking statements concerning our business prospects and profitability, which are subject to certain uncertainties and actual results could differ from those. Now I request the management to take us through the three remarks, after which we can open the floor for question and answer session. Now I hand the call over to Mr. Rohan Suryavanshi for his opening remarks. Thank you, and over to you, sir.
Thank you, Jill. The results and presentation have been uploaded on the stock exchange, and I hope all of you have had a chance to look at it. So to start, I would like to share our perspective on industry. As per the latest CRISIL report, India will spend nearly rupees 143 lakh crores in the next 7 years. That is almost double we spent in the last 7 years. In addition to core infra, major contributory vehicles will be roads, railways, urban infra, etc. In a step towards this direction, the government has already increased infrastructure spending budget by 11% for the next year, bringing to a total of 11 lakh crores, which is almost 3.4% of the GDP. This is a testament to the fact that governments have complete focus towards improving Indian infrastructure on a long-term basis. The timing of these planned investments could be varied due to elections or any other reasons, but we have full confidence of achieving these targets as a country. The National Infrastructure Pipeline has outlined what the government is thinking, and we are excited about the opportunity that it is presenting. From a DBL perspective, as you all are aware, we are now a fully diversified infrastructure EPC company, covering 8 major verticals: road and highways, irrigation, water supply, railways, metro, tunnels, special bridges, urban infra, and mining. We had embarked on this diversification journey a few years ago to make ourselves not only ready for the future infrastructure needs of the country, but to also shield ourselves from any unforeseen circumstances in a particular sector. Due to this diversified presence, we would be the direct beneficiary of the planned CAPEX by the government in the infrastructure sector, while also ensuring that our risk is spread over multiple sectors and agencies. Obviously, to capitalize on these upcoming opportunities, over the past few years, we have developed a very strong team, equipment banks, and the highest level of pre-qualifications and almost all the new verticals we have added over the last 6 to 8 years. With our judicious approach in tendering, meticulous planning, and technology-backed execution skills, we are more than confident to achieve a profitable and sustainable growth journey. Our another major endeavor, which I highlighted in our previous call, was of looking at and dividing our business/cash flows in two buckets, short-term and long-term. I had termed our new strategy as DBL 2.0. This strategy focuses on strengthening balance sheet, becoming a net debt-free company on standalone basis in the next 2 years, generating consistent and predictable cash flows, delivering a measured growth, improving ROE and ROCs, reducing concentration risk from any sector, client or geography, all of which we believe will help us in building a strong company capable of handling any disruptions. Our short-term business will be our EPC business, while our long-term business will be our asset business, which currently consists of road and coal and mines. I'm happy to report that our low-risk, long-term assured revenue portfolio is progressing well. This business is the coal and the road business. So our coal mining business has a potential annual revenue of rupees 5,000 crores per annum for the next 25 to 50 years as it achieves full output capacity. Just to share, currently we are overachieving our targets by almost 40% by extracting 7 million tons as compared to the annual target of 5 million tons in this financial year at our Siarmal mines. At this mine for the next year, we will be doing 50% higher than our target of 10 million tons. That is, we will end up doing 15 million tons. At the other mine, which is Pachwara mine, we are delivering the total requirement of 7 million tons to the government. With this run rate, we should achieve a combined revenue of about 1,500 crore plus rupees in the next financial year from just these two mines. Now the second long-term business is the road that I mentioned. From all the things that we have set into motion, we are expecting to get annual distributions of about 400 to 500 crore rupees from our 18 road assets as we set up the InvIT. This gives us a visibility for the next 15 years of cash flow. As I had announced in the last call, we are in the process of creating our own InvIT in partnership with Alpha Alternatives. In the proposed InvIT, DBL will be holding 74% stake and the balance 26% will be owned by Alpha Alternatives. This InvIT will enable us to divest our existing and future PPP road projects with much ease and without much dilution while ensuring free cash flows in the form of distributions. As per this agreement, Alpha is investing in our 18 road assets, where we are divesting the 26% for a total consideration of about 1,400 to 1,500 crore rupees. Besides this, they are also investing in warrants of the company of about 500 crore rupees additional. Tentatively, in this year till now, we have received about 130 odd crores through just issuing warrants, 1.6 crores convertible warrants in the last quarter. We are expecting to receive another 500 crores in quarter 4 of this year, which will total the year's total amount received from Alpha to about 650 odd crores. In the next financial year, we are assuming another amount in similar nature. And what limited balance we're expecting in FY26. And these are all tentative timelines which are based on construction timelines and other deliverables. Alpha has taken rights for almost 9.99% of the paid-up capital. They have the right to exercise these warrants in the next 18 months at an exercise price which is determined by the SEBI process of rupees 328 per share. For the InvIT creation, most of the initial contracts are executed. Due diligence of each project is underway and prerequisite conditions fulfillment work is nearing completion. We are targeting and are confident of creating the InvIT during FY25. Besides this, long-term business, the current EPC business is going strength from strength. While ordering in this financial year, given it was an election year, has been slow, there are, in the road business alone, projects worth almost 1,30,000 crores, which have been floated. And we expect some of them to be awarded in this quarter and over the next couple of quarters. But the visibility of those projects is very clear. With this update, I would like to hand over the call to our CFO, Mr. Sanjay Bansal, to provide insights on the financials.
Thank you, Rohanji. Good evening, everyone. I welcome all our stakeholders to our earnings call. Let me present the results for the quarter ended 31st December 2023. During quarter 3, FY24, the company has completed one HAM project, that is Repalwara to Telangana-Maharashtra border, worth 7,082 million. At the end of quarter 3, FY24, the company is having well-diversified outstanding order book of rupees 2,18,429 million. Now, moving from business to financial performance, the revenue of the company increased by 8.08% in quarter end FY24 on YOY basis from rupees 23,788 million in quarter 3 FY23 to rupees 25,711 million in quarter 3 FY24. This is due to better execution of the projects. On EBITDA front, the EBITDA of the company increased by 27.55% in quarter 3 FY24 on YOY basis from rupees 2,497 million to quarter 3 FY23 to rupees 3,185 million in quarter 3 FY24. The EBITDA margin increased on account of better execution of the projects and reduction in the construction material prices. Profit after tax increased by 19.87% in quarter 3 FY24 on YOY basis from rupees 795 million to rupees 953 million in quarter 3 FY24. This is on account of better EBITDA margins. In terms of the milestone, the company has basically crossed net worth of rupees 5,000 crores at the end of December 31st, 2023. Now let me take you through some important balance sheet items and order book position. The company has reduced debt of rupees 5,315 million during FY24, which resulted in net debt equity ratio improved to 36 basis points at the end of December 31st, 23 versus 52 basis points at the end of March 23. The receivable also decreased to rupees 13,819 million in quarter 3 FY24 from 16,018 million in quarter 2 FY24. This is on account of better collections by the company. Working capital days also decreased from 72 days to 67 days. This is again because of better collection of the receivable. So basically, after this, we are on target to achieve our goal set at the start of the year. Revenue growth is in line with our estimates 5 to 10%. EBITDA margins improving. Capex is planned between 50 to 100 crores. Debt reduction already done in 9 months by 530 crore. And we will be achieving our goal set at the start of the year of 800 to 1,000 crore. Now we can open the floor for the questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants may press star and 1 to join the question queue. The first question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you for the opportunity and congratulations on debt reduction. So that's the most important thing. Sir, couple of just some clarifications and then the questions. So for we are saying that 5 to 10% revenue growth for this year. So fourth quarter, then at least to achieve a 5% also, we need a 3,000 crore plus kind of a revenue. So this quarter we have done closer to 2,570 crore. So we are confident that we can cross 3,000 crore plus kind of a revenue in the fourth quarter.
Absolutely, sir. We are confident that we will cross the 3,000 crore revenue in quarter 4.
Okay. And in terms of now, and also the margin now will be, is there still a possibility that this margin will inch up to 13% plus kind of a number? So 12.4 this and 9 months also it is a 12.4% EBITDA margin. So is there a possibility that maybe in next year we can see a 13% plus kind of a margin?
So currently you should take the guidance that we have given in the past only as the current numbers only. Whatever improvement, let us keep it in the back pocket, and if anything comes, let us hopefully surprise you on the better than setting any aggressive goals right now. So let's just assume this for now.
Okay. And Devendra sir, now in terms of the order inflow, so that is for across the almost all road companies are facing because there is a slowdown from NHAI side. So just a couple of things. So how much now? So we have received just a 2,140 odd crore kind of a EPC value in terms of order inflow. So how much more we can look at in next 1.5 months? So how much value of projects we have already bidded where bid is yet to open, and how much more we are planning to bid? And if you can broadly classify in terms of which sectors, HAM or water, irrigation, metro, any other sectors?
Shravanji, so obviously the orders that we have won this year till now is about a little over 2,500 crores, so it's 2,600 crores the aspas orders that we've won year to date. We've highlighted those in our presentation as well. There are another 10,000 crores worth of orders in the road sector alone, which we are awaiting them to open. Besides this, I mentioned there's 130,000 crores of road tenders which have been floated, but obviously it has kept on getting delayed. The government has kept on pushing the dates ahead. So we are expecting some to happen then in this year, but then we are expecting a majority of it to happen in quarter 1 and then quarter 2 of the next financial year. That is what we're expecting. In the other sectors, we'll keep looking at it opportunistically, as you know. We don't give out numbers on that, but we're looking at it. So what is the plan irrigation projects? We are continuously looking and evaluating and building that as well. Those are awarded by the state government, so different state governments have floated their contracts, and we keep looking at them.
Okay, so in water also, are we seeing the states where already the election is over? So MP, Rajasthan, Chhattisgarh, or is there any scope even for UP also?
Yeah, huge scope in this, and they are not dependent on the national election. So there's a lot of scope here.
Okay, and now definitely it's a good thing that we have reduced 500 crore plus 531 odd crore. So by this year, another we will see a 300 crore kind of a reduction in the fourth quarter, and hopefully the last time as we guided, and we have this time also we guided that we will be a net debt free by FY25. But in FY24, how much more a reduction can possible? Because in your opening remarks, you said that the alpha alternative last quarter we were looking at in FY25. I think the higher cash inflow. Now we are seeing some may spill over to FY26. So if you can help us with that.
Yeah, you asked a bunch of questions, but I'll try and answer. If I miss out on something, do let me know. So number one, you're right. We've already reduced our debt by about 500 plus crores for in the first 9 months, as we had indicated. And I think that has been the big sort of challenge when outside investors and, all of you guys, support of the company had looked at. And that is what we have addressed, that we will now focus on building a lean, strong company with a very strong balance sheet. The target that you're saying about 800 crore plus of debt reduction will do. What that will do is by the end of FY24, we will have a debt to EBITDA of about 1:1, debt equity of about 0.25, somewhere in that. And I'm giving you ballpark figures right now, obviously, so don't hold me to exact numbers. And in the next year, we are hoping to reduce it by another similar amount of what we are reducing in this financial year. So that is the target. So it might not be completely, but it will be almost near net debt, type of company. That's what we are kind of targeting. And that's the plan. Because while we are reducing our debt, we're also investing in new projects as we go along. So we're balancing out between both those things and doing. But our long-term agenda, but in 26, like you said, we will completely be debt-free. Our long-term focus is on that only, and that's what we're trying to do, as said. Besides the debt reduction I've mentioned, that we are also looking at dividing our business into long-term and short-term cash flows. So the short-term cash flow was the EPC, which I mentioned, and the long-term is the coal and the asset business. Now, Alpha, you asked, how is that money kind of flowing? The money that we are indicating, we have indicated last quarter, or we're indicating in this quarter to you, how it's going to flow, is based on certain parameters of when projects are starting, when are we first starting some projects, and then when are we finishing those projects. So if there's any delay in any start, it will also end up delaying. And if the government dates have not come to start, it might end up delaying the ending dates. And that's why we, as we go on an ongoing basis, we keep evaluating what are the chances of different projects and when are they starting, finishing, when will we get the clearances from the government to flip it into the InvIT, and so on. So based on those careful considerations, we eventually decide how the money flow at that point of time looks to us. So this is while obviously this is, an exercise which will keep on continuing, but you can take these as broad guidance towards how the money should flow or how the deal is looking. For us, most important thing was building this InvIT platform, which I would have mentioned over the last quarter call as well, that the way that we have thought about it is this is a platform like a embassy and a Blackstone REIT, that we want to continue building, investing in this platform and keep increasing, the distribution income that will come to DBL. So, not only does it give us good platform to keep flipping our assets into, but it also gives us good visibility of long-term revenue, as we are already focusing on becoming a net debt zero company in over the course of next year or so, in the next 2 years. So after that, the cash that we will be getting at the standalone business, we will be looking to deploy that opportunistically in whatever assets or opportunities that we deem best for us, which will ensure long-term visibility, which will further ensure long-term visibility of cash flows for the company.
Good. Just to understand further, so InvIT broadly, it would be by second quarter of FY25, we will be able to set up, and the 400-500 crore kind of annual distribution we are seeing. So if, let's say, this InvIT gets set up even in end of second quarter of FY25, then also this 400-500 crore distribution can come, or this is an annual number? So this would be a FY26 level one can look at 400-500 crore kind of annual distribution.
Sir, out of the 18 projects, 8 will be going online now, and then the 10 will be going. So this number, the total 400 to 500 crores, which is almost closer to 500 crore that will come, 450 to 500, that will be achieved in FY26. Before that, it will be half of it, like let's say, will come. And these are full year numbers that I'm talking about, obviously, the distribution income. Now, you spoke about setting up the InvIT in the second quarter of FY25. The endeavor is to do that, but obviously this is not just singularly dependent on us and Alpha. It is also a regulator involved, which is SEBI. Based on their comments, observations, the back and forth that goes, we can only take a best estimate. Typically, this whole process takes about 9 months, I would say. We have embarked on it. So 6 to 9 months is the time that one should estimate for this kind of exercise. So we have embarked on that journey. So we are also expecting it to hopefully be done within that time frame.
Okay. And in terms of the obviously it's great that slowly even our working capital also we are reducing. So 67, 68 days. So and we said last time also that 8-10 days more reduction is possible. So even in fourth quarter also we can see some further reduction is possible in working capital.
Shravanji, it is already improved around 7-8 days, and further when we will reduce the debt and we will get the cash, more cash. So yes, there will be impact, but will be in the range of 10-15 days in a year total. So if you compare March 23 versus now, it is already moved by 5 days. Further, basically, it will improve similarly.
Okay, so major possibility would be there in FY25 and not maybe in this quarter, maybe 1 or 2 days possible, but if 5-10 days one can look at, it would be possible in FY25.
You are right. In total, it will be like 10 days reduction in the full financial year basis. So yes, 3-4 days or 5 days improvement will happen
in the next year.
Okay. Got it. And sir, whatever the pending appointed date, and we have already mentioned in terms of the likely this February, March, we will be getting received. So just trying to getting understanding in the sense that just because of the election, will it we will be getting appointed date, or will it be coming even post April, May? So there can be a further delay in the appointed dates, and so net the revenue for FY25, will it get impacted by that?
Shravanji, out of the total 4 AD awarded, 3 ADs will receive this month Urga Patalgaon and 2 packages of Bangalore Vijayawada, package 1 and package 4, and package 7 Bangalore Vijayawada will be received in March. So certainly all 4 projects will receive the appointed date this financial year by 31st March 2024.
Okay. And lastly, so broadly in FY25, we can still, based on this and whatever, let's say, even the order inflow doesn't come fully this year, the next year, hopefully post-election it will come. So we can see a 8 to 10% kind of revenue growth in FY25. That's the way we are targeting.
So see, right now the order book that we have gives us enough visibility for the next year. In fact, almost for the next 1 year and 3-4 months. 1.75 years. When you look at a pure sort of back of the envelope calculation of revenue and order book remaining. So next year we don't see any challenge. Our growth target that we have given is between 5 to 10% is what we had indicated. And based on that, only we have kind of built everything on back. As we mentioned earlier as well, our focus right now is not on any kind of aggressive growth that you would have witnessed with us in the years of 2016, 17, 18, where we were focusing primarily on growth, and a lot of that growth was also getting fueled by taking our external capital for equipment and etc. Our focus now is we're not doing capex. Earlier we used to do capex of 500 crores plus every year in equipment, and we consistently kept on doing that. But now we have brought it down to less than 20% of that. So it's 50 to 100 crore capex only per year. So hence focus is on measured growth, which is focus is on cash flows improvement, focus is on improving ROE, ROCE. Those are the kind of focuses that we've taken. Debt reduction, that is the focus that we are. And because obviously our business model is doing everything on our own, using our own equipment and people, if we are focusing more on that and reducing our costs and controlling them, improving asset turns, then we won't be focusing so much on growth. Because to get that higher growth, you need to invest again in capex, which we are not looking to do currently.
Okay, got it. So it's the similar 5-10% kind of growth one can look at in FY25 also. So and the capex till 9 months we have done 104 odd crores. So 20-30 crore more one can expect in the fourth quarter, or is it mostly done in the 9 month capex is the full year number?
Maximum if another 10-15 crores comes or something like that, we can account that. Yeah.
Okay. Thank you and all the best, sir.
Thank you very much, sir.
Thank you. Participants may press star and 1 to ask a question. The next question is from the line of Narendra from Robo Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on all the positive things that are happening in the company. So my first question would be regarding our other expenses. So is there any one-off or is this the steady state rate for other expenses?
Sorry? I could not hear you. Can you repeat the question again, please?
Yeah. Am I audible?
You are asking about other income or other expenses?
No, other expenses.
Okay. What's the question, please?
So is there any one-off in that, or is this the steady state thing that we can expect going ahead? Hello?
Just one sec. I'm just asking my team to listen to what the question that you asked, whether it's a one-off. Any other question that you have till then? Till the time my team is looking into that, what you asked, what number exactly is that?
Yeah. Okay. So I'll ask my next question. Last call you had mentioned that you are also expecting to reduce your depreciation amount. So any outlook on that, and how much saving can we expect in that thing?
Last quarter we looked to reduce our depreciation amount.
Yeah. We had a target to reduce our depreciation too. So is there any outlook on that?
Depreciation amount, because we're not investing in new assets, I think that automatically that depreciation amount will keep on reducing as that keeps getting going down as per the accounting standards. So I think maybe you're indicating towards that.
Okay. Got it. And the other expenses part?
This is, you are referring the total other expenses or specific one item?
No, I'm asking that is there any one-off in that or...
There is one-off of 10-12 crores. That's it.
Okay. Got it. Thanks. That was it. All the best for your future.
Thank you.
Thank you. The next question is from the line of Sanika from Sapphire Capital. Please go ahead.
Hi, sir. Actually, I want to ask, since we are on a debt reduction strategy, so going ahead, what kind of interest rate can we expect, especially in quarter 4 and FY25?
Thank you, Sanika, for your question. The interest rate will move basically in the range of 9 to 10%. Because we have a large consortium and we are trying with every lender to reduce the interest rate. This is our significant positives. So there will be reduction in near future.
So the finance cost can be in the range of
9 to 10%.
Okay, thank you.
Thank you, Sanika. So we're looking to improve from our current thing, which will be a slight improvement. The idea is to also improve the rating of the company, which is also the company has started that process as well. So as both those things, the external things, and as the negotiation with the bankers continue happening, we are looking to do that. But obviously, as you may understand and imagine, it's an ongoing process, an iterative process, and with a large consortium, it requires the approval of everyone involved.
Thank you. Sanika ma'am, you have any more questions?
No, that's it.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Hi. Thank you for taking my questions. Am I audible?
Yes, sir, you're audible.
Yeah. So thank you, Rohan. So my first question was with respect to one of the press releases that were given out on 8th of February. This pertains to some notice of claims with invocation of arbitration, and I assume, this is with respect to the assets that we sold to Cube Highways. Would you be able to share some more on this? What exactly is this matter?
This is in regards to a claim that Cube has actually filed against us, and obviously it's regard to the 3 assets that we sold to them. We were quite surprised by Cube sending us that, and obviously we have sent them a counter claim. The thing was, Cube is already arbitrating against the government, against government meaning NHAI, against the wrongful deduction in the annuity payments that Cube has. Government has claimed some deficiencies in the maintenance of it, which Cube is, which is what Cube is contesting. And obviously, maintenance of any of those Cube assets is not part of our agreement with Cube. They are maintaining on their own. So, given that it is a maintenance issue and they are already in the court against the government, and they've also gotten some kind of initial stay or something like that. I think they've also in receipt of that. So to send it to us was a little surprising. If you look at, we as a company, we are already managing more than 30 plus assets. So for Shrimp, and in all those assets that we are doing the maintenance, we haven't ever had any deduction of any annuities ever. There has never been any maintenance issue or anything else that has happened. And these are not just assets in, geographically located in one state. They are in different states across the country, and it involves both national government assets and state government assets. So we are very confident whenever we have done O&M, and there's a certain way of dealing with the government. Maybe Cube, because they are new in the O&M space and the asset buying space, maybe they have faced certain challenges. And they have diverted their responsibilities wrongfully towards us. But we are fairly confident that because you can't be claiming to the government on one hand that the government is wrong in terms of deducing payments and they are entitled to all, while also saying on the other side that it is our responsibility. So basically, you can't be on one side saying heads is also mine and tails is also mine. That's what's basically happening in this case.
Completely agree. But do we have any payments due from Cube? I mean, I realize that you've received a large part of the payment, but generally in most of these cases, you tend to have some of these deferred payments linked to some GST change in law and all.
We don't have anything outstanding from Cube.
Everything is recovered, yeah, right? Sure.
Yeah.
And on so the prospects pipeline that you spoke about, 130,000 crore rupees, would you be able to kind of break it down into how much of this would be EPC, how much HAM and BOT? And given the fact that I'm buying next year, maybe it would be as good as zero debt company, would you be willing to kind of go and explore BOT toll? Because there, I'm assuming, the competition would be a little lower than, compared to EPC or HAM. So would you be willing to kind of go and explore BOT toll once the balance sheet is delivered?
So, sir, the breakup between those projects, in that 130,000 that I spoke about, it's about 20% is EPC and the rest 80% is in PPP. So about 1 lakh crore of PPP projects are there in that breakup. And for the second thing that you spoke about, whether we would be open to BOT, of course we are open to BOT, as is a HAM project. We are completely open, and as we are getting lighter, we have no problem. Along with that, our own balance sheet getting lighter, we also have a partner here who's also willing to invest and grow that pie of the invest that they're going to be part of. So we have all sorts of options open to us. We evaluate all projects individually on their own merits. In the past also we have done BOT toll projects, one of which was our Guna-Biara project, which was on NH3 or Agra-Bombay Road, so it was part of that. And that has done very well for us. While obviously we've divested that to Shrem, and it's a good part of the portfolio. So even in future, we will be continuing to evaluate projects wherever we feel the traffic numbers justify the economic cost of building the project, and we see enough safeguards built in for a long-term traffic sort of comfortability that you need.
Sure. And the InvIT that you're planning to create would have meant to kind of acquire any sort of PPP projects, right? It is not restricted only to HAM. You're comfortable, but I'm not sure about alpha alternatives, whether they would be comfortable with BOT toll. So if you have any mandate in place wherein it restricts the asset addition only to a single category, let's say HAM, or is it open? You can consider BOT as well.
It's an open-ended thing. We are looking, both Alpha and us, we are people who've taken a call on evaluating opportunities as they come. As long as they're meeting our hurdle, IRR hurdle, we will be open to looking at them. We have no other sort of hiccup or restriction on any of that to not look at something. We are open to buying it from other players. We are open to look at both BOT and HAM.
Sure. And the fact that the balance sheet has become very, very light now, and it is supposed to go lighter even further. Any thoughts on accelerating growth? In between, because we want to conserve cash, the idea was to delever. We went a little slow in terms of growth. Even this year we are 5-8% sort of number in terms of growth. Could you think of accelerating, and would that need you to kind of invest more in capital or other equipments or let's say working capital? And what should be the ideal number when you look at growth? I'm sure you won't settle for 5-8%. The idea would be to kind of grow better than that number for sure. But Any thoughts there?
So our focus is on free cash flow that the company is generating at the end of the day. That is my biggest focus currently. That is our biggest focus inside the company, that we want to make sure that we get that. Now, when it comes to so when we like, if you speak about why the growth and everything, growth is always based on the company's own current strengths, which is an internal factor, and the external factor, which is how the external market, the opportunity from the government is looking. Now, in our case, if I'm sure since you follow the sector very carefully, the road sector has seen a lot of competition of late. And it's not, when you look at from 2014 to 2019, the average number of bidders in any bid would be about 6 or so. 6 to 8. We didn't find more than that in that era because, all the earlier 12 companies had gone bust. So all of us younger guns, whether it was us or any of our peer sets who are in the listed space currently, all of us had a good run at that time. Currently, the number of bidders in the road sector has increased quite a bit. And if you look at it, in the last year, the number of HAM projects that have been won by the smaller, players has been actually 2/3. So a lot of the smaller players have come in. So you don't want to chase growth at the expense of your profitability and at the expense of your cash flows. Our idea is that when we started diversifying a few years ago, we knew that sooner or later this is an industry which suffers from the same issues globally. We wanted to make ourselves more resilient to such shocks. We wanted to be able to be operating in different areas. Wherever we find good opportunity, take those opportunity. And that's how kind of we've done this. If you look at our PSS as well, they also struggled to build order books currently because they were primarily focusing on a single sector or a certain geography, maybe primarily. So there's all of those, study of people who have consistently remained in this road sector, my PSH, all of them are also facing those challenges far more than us. But at least for us, what's the good that has happened is because we diversified, much ahead of the pack. We built teams in all those sectors that we diversified. We built capabilities. We built, the required credentials. We, did all those things, equipment bank. So we are on a good stretch, and that's why we are evaluating projects across, geographies, across sectors. And that's what's most concerning for us right now. Chasing growth as when the opportunity arises, when you see that, this is the right opportunity to strike, or if you find a new project which, really excites us and we get it at the right place, sure, we'll do that when we get the right opportunity. But the idea of growth dictating every of our strategy is not there anymore. We would probably, as a young upstart, my father and Devin Bhaiya both are first generation entrepreneurs. Both of them came from very humble middle class background. So for them, when they were growing the business, the idea of, big diversified business, a listed business, growing size with it in different sectors and geography was the sexier idea at that one point of time. As we have, gone through our own journey and they've gone through the journey as a company, as entrepreneurs, facing the shocks of COVID, there were certain realignments of things that we felt of how we want to sort of go forward and what we want to do. And that is basically why we have identified how we want to take forward this company. And those are the metrics that we are currently focusing on. And growth is a measured growth is the focus, not a, aggressive stance on growth. Any opportunity comes, we will look at it opportunistically. But it's not dictating our overall strategy.
Sure. I have two more. May I, please? So one, both these are bookkeeping sort of. So one is, so we have some exceptional gains during the quarter. What's the tax implication of this exceptional gain? How much would be the number in our tax for the quarter which would pertain to this exceptional gain? And second is, I'm not sure if you gave any inflow guidance for the year FY24. You spoke about some of these tenders kind of getting bid out in Q1 or Q2. But then, do we have any target for this year? Because it's been only around 2,600 odd crore rupees.
The exceptional gain, basically these are the long-term capital gain. So the long-term capital gain rate, that is 10% plus the surcharge will be applied. But we have passed capital loss. So there will be no cash outgo very significantly.
Okay.
The second, for the order book, originally we had targeted about 8,000 odd crores of orders in this financial year. Till now, we've only gotten about 2,600 crores. And as we mentioned, there's some projects which are still awaiting to be opened up. So I can't finally say how much will open and how much do we end up getting this year. But our order book is still, as I mentioned, 1.75 years of still forward-looking. So we have enough visibility for the next year and for majority of the year after as well. So, yeah.
Sure. Thank you. Thank you for taking my question and all the very best for future.
Thank you.
Thank you.
Thank you. The next question is from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, on the footnotes, there are a couple of clarification if you can provide. One is like in the SHREM units that we have sold. So is this the first such transaction we have done, or have we done this before also?
So this is first time we have sold certain units. So around 1 crore, 10 lakhs units we have sold. This is first time.
Okay. And will it be fair to say, it's more of an opportunistic point of view, or any such things planned to the parties to whom we have sold in maybe on FY25 or anything that you can provide a color?
So this is opportunistic sales. We were getting good price. So, and the units were free. So basically, and the other side, we are reducing the debt also. So the idea is to basically capitalize everywhere. So that is what, and this is completely opportunistic sale.
Okay. So is it like to individuals or institutions, sir? I think without naming it.
Majorly it is one institution.
It's a global institution which has bought it.
Great, sir. And then second, I think there is one more footnote wherein you mentioned that incurred a loss of some amount. So is that fair to understand, the total amount received is something like 57 or 67 odd crores. Loss is like 44 crores. So something like we have done this transaction on a price to book basis at around 0.6 times. Is that fair to understand that?
No, actually we just sold total 10 assets to SHREM InvIT. Out of 10 assets, in one asset, while transferring 51%, there was a loss of 40 odd crores, and that is because only there are valuations model, and on second closing there are adjustments in terms of the agreed mechanism of valuation. So that is why it is loss. So it is not 0.6 times or so. The overall deal multiple is more than 1.4 times.
Okay. So basically, it's not for one particular project one should look. It's a portfolio, and the deal has concluded in 31st December. So maybe like in combined total, this is the probably that you booked.
No. So the asset is transferred one by one. So once we receive 49% approval from NHAI, we transfer. After collection of first annuity, the 51% goes. So yes, on overall basis, on 10 assets basis, the multiple is 1.4x plus. However, in this asset specifically, 51% transfer, there is a loss of 40. So including this 40 crore loss, still the total valuation is 1.4x of the total investment.
Got it. And then one last thing, I think you probably would have covered this in previous calls. In the coal mine, when we do extraction and we are probably doing a 1,500 crore in FY25, what sort of margins that we can make, and as the mining increase in terms of the million ton increase, does the margin also expand?
So we are expecting margins of around 20% in that business.
Okay, so that's a kind of peak probably, like or 1,500 is a 20%. That's what you're saying.
Yeah, we're looking at in that on an EBITDA basis.
Sure, sir. Got it. And then one last thing. I think you did mention initially that, short term is construction business and long term is asset ownership business. So in terms of asset ownership, any sector that you have probably like looking attractive to you, or probably anything that you're hearing from ministry that you will venture going ahead, anything that you can provide a color will be helpful. That's all from my side.
Currently, the two sectors that you mentioned, focusing on that. Other sectors that we might be looking at would not be right to speaking about our strategy over the call. But yeah, we keep on evaluating, like I said, on an ongoing basis. And if anything starts for us, we will obviously, share with all our lovely well-wishers such as you once that gets executed.
Sure, sir. Thank you very much, sir.
Thank you. Participants are requested to restrict their questions to two per participant. If you have a follow-up question, you can rejoin the queue. The next question is from the line of Manisha Agrawal from Buildcon Advisors. Please go ahead.
Hi, sir. Actually, I joined the call a bit late, so just one bookkeeping question. What is the trajectory of our interest cost going ahead?
Manisha, it will keep on reducing as our debt keeps on reducing. The trajectory will be of the interest costs is also keep on reducing. In totality, it will keep on reducing, and as also we negotiate better terms with the banks, given that the outstanding liability would have reduced quite a bit. Both those things should have a positive impact.
So, do we have any target going forward for FY25 or FY24 in terms of finance cost?
So, in terms of the interest cost, so interest cost is between 9 to 10%, but there are other items like the infra business requires a lot of non-fund-based limits. So, it is not just 9% on the fund-based outstanding. So, yes, there will be reduction in the interest cost in absolute terms, and in terms of the interest rate on fund-based facilities between 9 to 10%, and we are continuously negotiating with the lenders to reduce the interest rates.
Okay. Thank you, sir.
Thank you. The next question is from the line of Vaibhav Shah from JM Financial Limited. Please go ahead.
Thanks for the opportunity. Sir, we mentioned that we have received approval from the authority regarding the change in law of GST for 3 assets. So the claim amount is around 209 crores. So against that, we have booked an income of 64 crores. So when do we expect the actual cash to come in?
Sir, can you repeat part of the question again, because you're not very clear in between?
Yeah, so we have booked the present value of the claim amount of 209 crores pertaining to the 3 assets that we have sold to InvIT. So when do we expect the actual cash to come in under the deferred consideration?
Sir, basically the 209 crore, which is a total receivable to the SPV, and SPVs are already sold to Shrim InvIT, so they will be receiving till the time all annuities are not paid. But between DBL and the Shrim InvIT, they will be discounting all the change in law on the financial model, valuation model. So for DBL, the value accrues to 64 crore.
So that 64 crore will be receivable by when, or we have already received the amount?
We will be receiving this amount in near future.
Okay. So secondly, when do we expect to receive the balance amount of the warrants, 75% warrants?
As per the SEBI rule, the investor can subscribe the shares from within 18 months from the first subscription, which is December 21st, 2023. So from there, they got 18 months. So balance money, as per SEBI guidelines, comes after 18 months from December. But the investor may invest even earlier.
Okay, so we factored that around 500-600 crores we are expecting from Alpha in FY25. So are we factoring anything from that front, or that would be expected in 26?
No, it is from our 18 assets, 26%. So from first 8 assets, the first 500 crore will be coming. And from another 10 assets, 26%, the other money will be coming. But this 400 crore is not included in FY25.
Okay. And sir, what is the tax rate that we can expect in 25 and 26?
So, as Rohanji updated you during this call, we are targeting FY26 March 31st, 26 net debt zero.
No, I'm asking about tax.
Okay, tax rate. So the maximum slab, that is 35%.
Okay. And sir, lastly, for the initial 19 assets that we are under deal with SRAM and Cube, what is the amount sitting in our balance sheet as of third quarter?
So at the end of the third quarter, there is only one asset pending to be transferred, which is Patrapalli Katgora, 51% to be transferred. We will be receiving around 42 odd crores against that transfer.
So our investments and loans in the books are for the current portfolio now, apart from that amount for Patrapalli.
Patrapalli, the exact invested amount, I will just check in. It is around 18.2 crores.
Okay. So apart from that, there's nothing for the other 19 assets that we already sold are under the process.
So with the transfer of 51% in Patrapalli Katgora, the entire 19 assets will be transferred, completed.
Okay, sir. Thank you. Those are my questions.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Sir, just a clarification. You mentioned that in other expenses there was a 10 to 12 crore one of what was this related to? Hello.
We'll look into the details and get back to you, Shravanji. Alexa, my team will have the detailed thing, look into it and get back to you. Yeah?
Okay. Got it. Sir, so this 35% tax rate at that P&L level will be there for FY25, FY26 also the same rate will continue, or we will be moving to 26% tax rate in 26?
No, we will continue with this rate only, because I think we still have some outstanding tax MAT credit available with us.
Okay. And DBL infra date is as of December is how much?
It's the same as it was the last quarter, 675. So it's the same. We haven't drawn any more money there. We are in fact looking to reduce that also.
Okay. So previous two participant has also asked, so we are just trying to figure it out in terms of the finance cost in terms of absolute level. So this quarter was 129 odd crore. So by end of this year, further whatever 300 odd crore the debt reduction, and next year also we are looking at 800 crore kind of a gross debt reduction. So in that scenario in FY25 at finance cost level, and how one can look at how much more reduction. So this year would be a 530 odd crore. So will it reduce by 130 crore, 150 odd crore at least minimum? So that's the way we are trying to understand.
So we expect that it will reduce at least by 100 crores of whatever financial cost will be this year. It will reduce by at least 100 crores, even on the conservative side.
Okay.
Because like I said, I don't want to give this outstanding thing, but it will on a very conservative side. So it should be a decent high number, but even on the conservative side, it should reduce by that much at least.
Okay. Got it, sir. Thank you and all the best.
Thank you, sir.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Rohan Suryavanshi for closing comments.
I, on behalf of the whole DBL team, would like to thank all the participants for coming and asking questions about the company. As always, it was my pleasure to be able to share our journey and till now and our thought process going forward. I look forward to seeing all of you guys on the next conference call. At the end, just wishing all of you guys a very, very happy new year and in advance, and hoping that this year may be the best yet for all of you guys. Thank you.
Thank you. On behalf of Dilip Buildcon Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.